Good morning, hello and welcome. Good morning, hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. And it's the middle of the week and Christmas Eve. So wishing all the viewers a very Merry Christmas and the best of the season's greetings. And wishing that your portfolios shine better as we step into the next year itself. But yes, indeed, with that, also hoping that our own markets see a Santa rally, given that largely this year has been quite narrow for investors. But yes, to start off today, we have the trends in the GIFT Nifty, which is pointing out to a positive start for Dalal Street. But remember, since it's the Christmas Eve, majority of the global markets will close early and thin volumes are to be expected. If you look at the New York Stock Exchange, that'll close by about 1 p.m. and even Asian markets are open for just half a day. But yes, steady cues from Wall Street overnight, given we did see that the US stocks have extended gains to about the fourth consecutive trading session, and we have seen S&P 500 closing at record highs. So the Christmas celebration has definitely started there. Because if you look at the latest third quarter GDP print, which has come after quite a bit of a lag due to the federal government shutdown, it has been quite the surprise. Given that the US economy has seen expanding by about 3.5%, which is the fastest that the economy has seen in the last 2 years. But beneath these numbers lie two major readings for the US Q3 GDP print. Two main factors, that is the first is the consumer spending, which has risen to about 3.5% from 2.5% in the last quarter, and as a result of this increased spending, we have seen that the personal consumption expenditures, otherwise called as the PC inflation index, which the US Federal Reserve keenly watches for understanding their interest rate cut paths. This PC inflation data has risen to about 3% from 2.1%. So yes, this particular point is going to determine the next course of the rate action by the US Fed, and this rise in inflation could keep the officials cautious on the next rate cut path as well. Remember that this year already we have seen US Fed cut interest rates by about 3 times, and the dot plot had indicated one interest rate cut next year too. So yes, something to keep an eye out for as well. But yes, good news that came in for our own markets, where the RBI has announced measures to inject 3 lakh crore rupees of liquidity via open market operations and forex swap. So yes, we'll be watching out how banking stocks behave in today's trading session. Also, apart from banking stocks, IT stocks could be in focus, given that US has scrapped the H-1B visa lottery system with a weighted selection process. Now, this will prioritize higher skilled and higher paid workers. So yes, we can see some IT companies, for instance, Infosys, Wipro, they might rethink their hiring strategies going ahead. So yes, we'll be watching out how the IT stocks also behave in today's trading session. But yes, we'll be discussing all of this and what your trading strategy should be with our experts in the show. Also, without a doubt, we'll be taking your stock related queries, so keep dropping them on our live feed. But before delving deeper into the show, let's take a quick check of the top headlines this hour. US indices climb for the fourth straight day, led by strong gains in the tech giants. The S&P 500 ends at record high. The strong GDP growth at 4.3% for the third quarter has also boosted the sentiment. Asian markets have opened mixed. Participation remains thin as several markets are slated to close early on account of Christmas Eve holiday. Meanwhile, the GIFT Nifty is indicating for a positive start for our own markets. Crude prices edge higher on strong US economic growth and tensions between US and Venezuela, and supply disruptions and long tensions which has occurred between Russia and Ukraine. Gold and silver prices continues to surge, with both the precious metals hitting record highs. IT stocks are likely to be under pressure as the US announces major changes to the H-1B visa program, replacing the long-standing lottery system with a weighted selection process that prioritizes higher skilled and higher paid foreign workers. The move aims to safeguard wages, working conditions and job opportunities for an American worker. And in order to boost liquidity in the banking system, the Reserve Bank of India will buy 2 lakh crore rupees worth of government bonds in open market transactions in 4 tranches, which is scheduled between 29 December and 22nd of January. The RBI will also conduct 10 billion swap to ease the liquidity. All right, in yesterday's trading session, we have seen that the Nifty has paused the rally after 2 days of consecutive winning streak and ended flat on a weekly expiry day as well. But yes, we largely saw a range-bound trade given that the mild selling which emerged towards the close itself. But yes, the benchmark did close below that 26,200 mark. And among the sectoral movers, we did see media, metal and FMCG leading the sectoral gains. IT, PSU banks and pharma stocks were under pressure. But yes, broader end of the markets, mixed performance coming in from there because mid-caps ended flat, but small caps edged higher, bucking the otherwise weak trend of the markets. Yesterday, we did see rupee ending flat as year-end flows offset the weakness. But yes, given that we did see RBI announcing some measures to inject 3 lakh crore rupees worth of liquidity, so as a result of we have seen a little bit of an appreciation per dollar in today's market. But yes, we'll be watching out how the fund flows pan out because yesterday FII stood as net sellers, sold stocks which was worth about 1,700 crore rupees in the cash markets, and DIIs bought stocks which was worth about 3,700 crore rupees in the cash markets. If you look at the Nifty put call ratio, that has dropped to about 1.14 from 1.42 levels in the previous session, and the stock that remains a part of the FNO band, that is your Sammaan Capital. But yes, on that note, let's take a quick check of how the pre-open rates are looking like as of now. If you look at Sensex, that is up by about 8 points. Nifty is down by about 6 points. So, all in all, it's looking like a very flat start for the markets as of now. But on that note, let's quickly get on board with our technical expert of the show. We have Ruchit Jain of Motilal Oswal joining us to understand how the trade setup looks like. Ruchit, good morning. A very Merry Christmas to you. I mean, yesterday we did see Nifty consolidating below that 26,200 mark, but can we expect Nifty to resume the uptrend after a day of breather?
Yeah, hi, very good morning. Merry Christmas to you and all the viewers too. Then yes, if we talk about the markets, then last 2 or 3 trading sessions we have seen a comeback in the broader markets as well. And mainly, the major concern that the markets that had recently last couple of months was the depreciating INR. Now we have seen some pullback move from that 91 mark in USD INR in last 2 or 3 trading sessions, which is a good sign. So overall, I think the momentum should continue on the positive side in the near term. Although some bit of intraday consolidations can be seen, but even if you look at the Nifty, after about 1 month of consolidation, the index managed to form a support base around its 50-day EMA and has resumed its upward trajectory from then. So any intraday declines, I think it is a buy and dip market now, and use intraday declines as a buying opportunity. We expect the momentum to continue in Nifty in the near term towards 26,325, which were the previous swing highs. So 26,300, 325 can be expected on the index soon.
Okay. What about the Bank Nifty index, Ruchit? Because we did see RBI announcing some measures to inject liquidity. How do you expect the Bank Nifty to fare today?
So I think that's positive sign, in fact, a positive news, and we have seen a good relative outperformance from many banking and as well as some NBFC names of late. So that could continue on the positive side. As far as index is concerned, 59,000 is the immediate support for the index. And on the higher side, one can expect 59,600 to 59,700 in 1 or 2 trading sessions.
Okay, all right. That's the view coming in from the Bank Nifty index as well. But yes, broader end of the markets, that saw a bit of a mixed participation because small caps bucked the trend, but mid caps ended flat yesterday. Ruchit, what's your point of view? I mean, if you look at the Nifty small cap index, it's up for the 4th consecutive session now. So what can we expect next?
So, Lucia, if we see since the month of October, we have seen a significant underperformance as well as the small cap index was there. The benchmark index Nifty traded within a narrow range, but there was clearly a price-wise corrective phase since in many of the mid-cap and the small-cap names. So momentum readings are in the oversold zone post the recent correction. So that is leading to the pullback move. And as I said, the cool off in the INR, even dollar index, if you see, it is trading at a 1.5 months low. So I think these are all factors which should lead to some pullback move because of oversold setups. So from a near-term perspective, we think that at least the price-wise corrective phase has been done around the recent lows, and we should see a good stock-specific pullback as far as even small caps or mid caps are concerned.
Okay, all right. That's the view from the broader end of the markets, and we'll watch out how they behave today. But yes, among the sectoral movers, it was the metals that did well for the fifth consecutive session. Ruchit, coming to you, of course, Nifty metal as a basket has been quite buoyant so far this year itself. But from a levels perspective, what are we expecting next from the Nifty metals?
Metal index and the metal stocks have been doing well mainly because of the rally in the base metals we have seen, be it gold, silver, which has seen a one-sided up move without any correction based on that certain stocks which are related to that, such as Hinzink, Vedanta. We have seen a good up move in those stocks. In copper, to add one more. So I think that is likely to continue going ahead. Secondly, fall in the dollar index is usually positive for the metals. There's an inverse correlation over there too. So rally in the base metals, fall in the dollar index. I think these all will keep the momentum intact in metals. We like stocks such as Hinzing, Hincopper that should continue its uptrend. NMDC is another stock where we witnessed a breakout from a consolidation yesterday. So NMDC should see a good pickup move in next few trading sessions. So metals, I think the biasness remains positive and one should continue to trade on the long side as far as certain metal stocks are concerned.
Okay, all right. That's the view from the metal basket itself. But yes, let's talk about the FMCG index as well, because yesterday we did see small buying traction. But if you look at the overall index, there has been no excitement here. Ruchit, how are you placed on the FMCG theme, and anything that you're liking from the space, or are you cautious about?
So not the sector as a whole, because relatively we have not seen any outperformance coming in from the FMCG space. But very selective stocks such as Tata Consumer are looking good technically. A relative outperformer, if you see within the sector itself, the stock has no managed to show some good support on any kind of declines towards 1150, 1130. So a good support base has been formed over there. So price-wise downside seems to be limited, and in case of any up move in the markets in the FMCG space, Tata Consumer could outperform.
Okay, all right. Tata Consumer could outperform. Let's take a quick check of the first trades that coming as on your screen. If you look at Nifty, it has opened quite flat, but with a positive bias, 12 points gain above that 26,189. So yes, it's a very quiet start for the markets. If you look at Sensex, also 39 points gain coming in for Sensex, flat with a positive bias starting. Bank Nifty also opening in the green with about 0.1% gain. Nifty midcap also starting the day with about flat but with a positive bias. If you look at the small cap index as well, 0.1% gains coming in from there. India VIX continues to remain near its all-time low levels. And from the sectoral front, IT stocks remain under pressure. If you look at the Nifty IT index, it's extending its loss to about the second consecutive day today itself. And right now it's down by about nearly 0.3%. On the other hand, if you look at the other sectoral movers, that is your Nifty Realty Index has opened also in the negative territory, and also for the consumer durables basket that has opened quite a bit in the red itself. But yes, all in all, if you look at Nifty Metal Index, it's extending the gains to about the sixth consecutive session, showcasing a gain of about 0.3%. On the other hand, if you look at the PSU Bank and private lenders, both of them have been quite buoyant in this market. But yes, let's take a quick check of how the top gainers and movers look like on the Nifty 50. If you look at the Coal India is seeing a gain of about 1% itself. Shriram Finance also extending its gain. 0.5% gains coming in from Shriram Finance as well. Hindalco, Axis Bank, Geo Financial, also one of the top Nifty gainers. But yes, on the losing front, what looks like Infosys, Wipro, HCL Tech, so all of the IT stocks have been quite under pressure, seeing a decline of about nearly 1% itself. But yes, IT stocks have been under pressure given that we've seen that the US Department has replaced H-1B visa lottery with a weighted selection system which favors higher paid and higher skilled workers, and companies could be rethinking their hiring strategies for mid and entry level talent. Ruchit, what's your take? I mean, we have seen the sector. Yesterday also it was one of the day of profit booking. Today it's extending its losses. But with the recent move and the recent visa rejig that the US has brought about, can we see further pressure going ahead?
Broader trend does not seems to be negative now, for the IT space. We have seen some cool off yesterday, but overall, I think the large caps could do well going ahead. So we are positive from a broad term perspective. Maybe some short term pullback move could be there, but one should use that as a buying opportunity in the large cap names.
Okay, all right. That's the view coming in from the IT space as well. But yes, let's move on and talk about one of the top Nifty gainers, that is your Coal India. It's showcasing a gain of about 1% in today's trading session as well. Yesterday also it was one of the top Nifty gainers. Today also Coal India seems to be doing well. And we have a news update where the PSU has given, the board has given about an in-principle approval for the listing of its wholly owned subsidiary, which is your Southeastern Coalfields. Ruchit, what lies next for Coal India?
So trend seems to be positive. I think yesterday itself the stock gave a breakout from that huge consolidation phase. That too, if you look at the volumes in yesterday's trading session, they were much higher than the average. And also it has been in the in news because of the positive news we have seen such buying interest coming in. So I think after a long consolidation we have seen such momentum in the stock. This should head higher towards 415, 420 kind of range. So any existing long positions should be held on. If you get any kind of minor dips in the near future, or so, then that should be taken as a buying opportunity in Coal India.
Okay, all right. That's the view coming in for Coal India. Let's move on and talk about GAIL, because that stock has been showcasing a bit of gains given that the Chhattisgarh government has signed a MOU, that is your Memorandum of Understanding, with the company to explore a greenfield gas-based fertilizer project in the state. Ruchit, if you look at the stock is showcasing gain today, nearly a percent gains. But so far this year, the stock has been an underperformer. And even over the past 1 month, the stock has declined by about 5%. So what can we expect next? What lies ahead in terms of levels?
There could be some pullback move, but as you said, that it has been an underperformer of late, compared to the, what we have seen in certain stocks within the sector. So it doesn't seem to be an uptrend yet. Yes, just because of the oversold momentum setups, we can see a bounce back towards 178, 179. But again, the 200 DMA resistance would come in around those levels. So won't advise to go and take any fresh longs. But if any existing long positions are there, they can wait for that pullback towards 178, 180 and can review over there.
Okay, all right. That is the move for GAIL. But yes, let's take some viewer queries that is dropping on our live feed. The first query coming in from Naveen is asking the view on NMDC on how this particular stock looks like. Ruchit, what's your view? I mean, we discussed about Nifty Metal as an index, but for NMDC, what's your take? Because in the past 1 month, the stock has seen good traction.
Yeah, so in fact, we have seen good price volume action yesterday also in NMDC. Earlier, whenever the stock was coming around that 79, 80 mark, it was facing resistance over there. Now that has been surpassed with good volumes, which is a good sign. So that should lead to a continuation of that uptrend towards 88, 90 mark. So the trend remains positive for NMDC. I think if you have any long positions, then you should continue to hold on. Fresh buying and can also be done in NMDC with stop loss below 76.
All right, so stop loss of 76 for NMDC that we need to watch out for. Let's move on and talk about another viewer query. That is your Amaji has been asking the view on bank stock. Which one is good to buy at the particular price point for a short-term perspective? Any thoughts on this counter? Any thoughts on this query, Ruchit, for you?
Within the banking space, City Union Bank is one bank that we like from a technical perspective. Price up move followed by consolidation, and post the consolidation again there has been a follow-up price action as well. So this clearly indicates a good buying interest coming in City Union Bank. So City Union Bank is one stock that we like if you're looking for short-term perspective itself. Apart from that, from the large cap space, I think Kotak Bank can be kept on the watch list. The stock has been into a consolidation phase, but the 20 and 50 DEM are acting as a good support for the stock, which is 2140, 2150 zone. So the price downside seems to be limited from here on. Any positive momentum, if you see, and the stock managed to surpass the 2200 mark, then we can expect a good positive trend in Kotak Bank as well. So City Union Bank, Kotak Bank, these are a couple of names that we like from the private sector banking space.
Okay, all right. Those are the stocks that we need to watch out for. But yes, let's move on and talk about another viewer query. We have Sameer Nayak who's been asking the view on solar industries for a fresh entry at the current levels. Ruchit, what's your take for solar industries? Because if you look at the past 1 month, the stock has entered into a consolidation mode. So can we expect the sideways trend to continue, and what levels would you prescribe here?
So defense as a space have seen a good price-wise correction in last 2 or 3 months. And last 2, 3 days, we have seen a pullback move in all those stocks which were oversold. So solar industries also can expect a pullback towards 13,000, 13,200 zone. But again, no, not sure whether that will be a part of an uptrend or just a pullback. So So at least we can say that from a price-wise corrective phase, the stock would now enter some time-wise corrective phase or a consolidation, where the recent low of around 11,800 would become a good support for the stock, whereas around 13,200 the resistance would be there. So expect some consolidation to happen in solar industries.
Okay, all right. That is the level that we need to watch out for, and consolidation could be likely for this particular counter. All right, let's move on and talk about another viewer query. We have Samir who's also asking about Keynes Technology and whether the worst is over for this particular counter. Ruchit, any thoughts from a technical perspective on how this counter looks like going ahead?
No reversal signs as of now. So I would advise to keep a wait and watch approach. Whenever we see such underperformance or such sharp correction from the higher levels, that too with good volumes, the stock can see some relative underperformance for some period of time. You can see the last 3 4 days when the markets have also picked up. You have not seen any kind of buying interest or any kind of price wise up move coming in Keynes Technologies. So the markets are moving and the stocks are not, and the stock is not showing any strength. That is a clear sign of underperformance and no trend reversal signs as of now. Yes, from a longer term perspective, the stock has seen a good support around 3,700 mark, which is a recent swing low where the weekly 200 EMA is coming. But it needs to see some good price volume action to take a guess that the worst is over for the stock. So as of now, just keep on your watch list until we see any kind of trend reversal signs.
Okay, all right. Something to watch out for before trend reversal. All right, let's move on and talk about another viewer query. We have Naveen who's been asking the view on Ambuja Cements on how this particular counter looks like for the medium term. Ruchit, what's your take? I mean, yesterday we did see the stock had gained on the back of the merger announcement between Orient Cement and ACC. But how does the outlook look like?
So the stock has been in news, yes, because of this merger since the last 2 days. Overall, price-wise, it seems that the stock has formed a good support around this recent low of 520, 525. And a higher top, higher bottom structure has been formed from there on the lower time frame chart. So it seems that the price-wise downside would be limited from here on, but there are no signs of any big trended up move coming in the short term. So maybe some consolidation or some pullback move could be there. At current levels, I'd advise to go long only if you have a more of a positional perspective rather than trading. Only if you want to hold the stock from a bit midterm perspective, then you can look for to accumulate gradually at current levels and keep some room to add more if we get any dip towards that support zone of 535 to 530.
All right, 535 to 530 can be the support levels. All right, let's move on and talk about another viewer query. We have Shweta Naidu who's been asking the view on Jio Financial, Bajaj Finance or Nuvama Wealth. Which of these stocks is good to hold at the current price point? If you look at from a 1 month perspective, Nuvama Wealth has been a clear outperformer out of the three. And after that, following that, we have Bajaj Finance, which has done well. And after that, we have seen Jio Financial as well. But yes, from the three, what would you advise, Ruchit? Which one should she hold at this particular price point?
So I believe if you already have existing long positions in this, then you should continue to hold all of this because no, now none of the stocks are showing any kind of no price-wise negative signs as of now. Just Nuvama relatively is holding well. A breakout above 7,600 should lead to next leg of up move in the stock, so that could do well relatively. But even in terms of other stocks such as Bajaj Finance and Geo Finance, post the recent consolidation, these stocks are also trading quite close to their midterm supports. So the downside seems to be limited in these names as well. So I would advise that if you are already holding the positions, then keep some patience and continue to hold all three positions.
Okay, hold all of these three positions as of now then. All right, with that, let's move on to the next viewer query. We have Satya who's been asking the view on GMDC for a long position. Of course, the stock has done quite spectacularly well in the past 1 month itself, and of course, so far this year as well, the stock has given out stupendous returns. Ruchit, what's your view for GMDC? Can the rally sustain going ahead?
So yes, overall the trend is still positive only, although we have seen some pullback or correction from the 640 levels to 460, but the stock is still trading about their long-term support. So it seems that if you have a bit mid to long-term perspective, then you can continue to hold on. But if you are just looking from a short-term perspective, then in short term the stock can see some consolidation in 560 to 480 range. So from a very short-term perspective, it seems to be more of a time-wise corrective phase in the stock, but longer-term trend still remains intact.
Okay, longer term trend still remains intact for this GMDC itself, so something to watch out for. All right, let's move on and talk about another viewer query. We have Shweta who's been asking the view on JBM Auto on how this particular stock looks like because she's been holding the stock at a buying price of about 697 rupees, and she's asking whether she should average or sell on rise. JBM Auto, any thoughts, Ruchit? Because 697 is a buying price and the stock is trading tad below it, 627. But today the stock is seeing good traction, 8% gains. What's your view?
Just hold your existing positions. You have already seen that price-wise corrective phase and the momentum has started picking up now. So initial resistance would come around 660 where the 200 EMA for the stock is placed. So let's see what the stock does around those levels, whether we see profit booking or continuation of the uptrend from there. So I think just review the stock again when it comes around 660. At current levels, I don't think you need to do anything else. Just hold your existing long positions.
Okay, hold your existing long position for this particular counter. That's your JBM Auto. All right, let's move on and talk about another viewer query. We have Satya who's been asking the view on Godrej Consumer and whether it's time to book profits at the current levels. Of course, the stock has seen good traction and buying interest in the past 1 month, and as a result of which the stock is up by about 7% in just 1 month itself. Ruchit, what's your view? Is it time to book profits or hold and see further gains going ahead?
The trend is not negative, but relatively, there has been a relative underperformance in the stock over last few months. So I think as we even spoke about Tata Consumer within the FMCG space, where overall it looks to be more stronger than the other FMCG space. So I think you can take that decision to exit from Godrej Consumer and make a shift to Tata Consumer.
Okay, from Godrej Consumer can be shifted to Tata Consumer then. All right, let's move on and talk about another FMCG query. That is your RP Kar who's been asking the view on HUL because she's bought about 400 quantities at 23,500 rupees and she's asking the advice for the near term. Any thoughts on this particular counter, HUL, because it's trading below her buying price and the stock has fairly been on a downward trajectory right now.
So again, I would have a similar advice over here too, that if you're looking for FMCG space, then Tata Consumer is looking better. We spoke the same for Godrej Consumer as well. HUL so far has been an underperformer, no signs of uptrend still. Yes, the momentum readings are a bit oversold, so some kind of pullback moves could be seen, but no signs of uptrend yet. So again, I would say in case the FMCG as a sector also sees any kind of up move going ahead, then Tata Consumer could outperform. So I have similar advice here as well. Make a shift from HUL to Tata Consumer.
Okay, so Tata Consumer is something that you're bullish on from the FMCG basket. All right, with that, let's move on to the next viewer query. We have Hari Krishnan who's been asking the view on City Union Bank at the particular price point. Of course, the trend has been quite positive for the stock, and in the past 1 month, also the stock has seen decent traction. Ruchit, can the rally sustain, and what's the next target level that the investor can watch out for?
Yes, the trend for City Union Banks remains positive. It's clearly a sign of a continuation of the uptrend post that recent 1 month of consolidation which we have seen. On the high level, the stock has potential to rally towards 300 mark in the near term, 300 to 305. So continue to hold on if you have a trading positions, and I think trailing stop losses higher would be the best way to ride this uptrend.
Okay, all right. That's the view coming in for this particular counter. But with that, let's move on to our next viewer query. We have Hari Krishnan who has also been asking the view on NBCC on how this counter looks like. Of course, we've seen that the sideways trend, the stock has entered in a consolidation zone, Ruchit. I mean, it's oscillating between that 110 to 105 odd levels. What can we expect next going ahead?
So yes, broader trend, I think it has been sideways over last 1.5 month, but the stock has managed to good form a good support base around that 106, 108 mark. So till those levels are intact, the price-wise downside should be limited from here on, and any breakout above 120 should then lead to an up move towards 127, 128. So at current levels, I would suggest that you can continue to hold on and review the stock once if it crosses this 120 mark, then 127, 128 can be expected in NBCC.
Okay, all right. 128 can be expected going ahead. All right, let's move on with another viewer query. We have Sameer who's asking the view on CDSL or NSDL for the long-term horizon. How are you placed here, Ruchit, and which one do you think is favorable on a technical perspective?
So seems to be more in a consolidation phase, although the downside could be limited, but there are no signs of any trended up moves coming in, at least in the short to medium term also. So I would say that if you look at the entire capital segment, capital market segment, then stocks such as exchange stocks such as MCX are showing a good outperformance. So that could continue. I think CDSL, if you have a fair longer term perspective, then you can continue to hold on your existing long positions. The chart structures are range bound for now, but downside would be limited in that stock.
Okay, all right. Just one last question before we let you go, Ruchit. Any topics that you want to highlight here? I know you discussed a range of stocks, but what are you finding interesting as of now?
Yes, overall, UPL is one stock that we like at current levels if one has to create fresh longs. Again, this is another stock where we have seen a good outperformance relatively over last few months, and price up moves have been supported by good volumes. Any corrections which are coming, the volumes are not that high. So this is a clearly a positive sign, and buying interest is seen over there at any declines. So we are expecting this stock to head high towards 820, 830 kind of zone in the short term. So UPL can be bought at current levels with stop loss below 755 for potential up move towards 820 to 830.
Okay, all right. That is a stock that we need to watch out for. But yes, with that, we have to let you go, Ruchit. But thank you so much for your time and answering our viewer queries.
Thank you very much.
All right, let's take a quick check of the markets before we move on to our next guest of the show. Sensex is up by about 150 points. Nifty has also rebounded from the lows, up by about 51 points, above that 26,200 mark as of now. So yes, the market breadth has turned quite positive because, the advanced decline ratio looks like at 2:1 as of now. But yes, India Wix, that remains a little elevated, 0.1% decline, gains coming in from there. But yes, all in all, the sectoral moves have also, cropped up in the green. It's recovering from what we started and where we started in today's trading session. If you look at the broader end of the markets, both the mid-cap and small-cap index has been showcasing good traction. But yes, particularly good gains coming in from the Nifty small-cap index, showcasing a gain of about 0.4%. Among the sectoral movers, Nifty IT index continues to be under pressure. 0.5% cut coming in from the IT basket itself. FMCG stocks also remain bogged down and subdued in today's trading session. But yes, what seems to be doing well in this market is your realty stock, soaring in the trade with about Nifty Realty up by about nearly 1% itself. If you look at the metal basket, also Nifty Metal up by about 0.5% each. And Nifty Auto Index very marginally higher, but flat with a positive bias as of now. But with that, let's quickly move on to our next guest of the show. We have Kranti Bathini, equity strategist at WealthMills Securities, joining us. Kranti, good morning and wishing you a very Merry Christmas and the best of the festivities. But, let's start off with the markets and how it has fared so far this year. It's largely consolidated. We've had weak earnings. But if upgrades do come through next year, do you see this translating into a broader participation or staying limited to just select pockets?
Lovisha, good morning to you and happy Christmas to you and to all the viewers of Money Control. Lovisha, what we witnessed in the past 1 year has been the markets are in a consolidation phase, and the greater pain what we witnessed during the year was the fag end of the year. We have witnessed profit booking in especially the mid and small cap space. That's where the profit booking we witnessed in the market. By and large, this is the year of consolidation, both in terms of the value-wise and also the time-wise correction, what we witnessed in the market. As we are stepping into the new year, we can see some kind of a renewed interest with respect to the broader markets we are going to witness, and also the earning recovery. That's where crucial for the markets going ahead. So we can expect some kind of a earning recovery in the Q3 and Q4 quarters, and also we can expect a complete rebound of the earnings in the FY 26 and 27. That's where the key trigger is going to be. By and large, right now, markets are not in a mood to run away in a hurry anywhere. They are in a consolidation phase, but what we are going to witness is, by and large, a stock-specific action. That's what we are going to witness in the markets going ahead.
Okay, okay, all right, got it. But yes, the top headline seems to be the IT stocks today, Kranti, because they have been under pressure. We have the new visa rules that is replacing the lottery system by weighted selection process that prioritizes higher paid workers. How do you see these new rules impacting the IT companies, and what does it mean going ahead?
Somewhere the other IT stocks have been in a consolidation phase, and we can see some kind of a bottom fishing also that's coming back in IT stocks on a medium to longer term perspective. With respect to the visa norms and all, definitely they're going to have impact on the margins. But Lovisha, we also need to take into consideration the business models for these IT companies have been changing. We have the remote operations have been coming into very active mode, and also we are coming up with the global cluster, from a cluster to a remote models that are going to help these IT companies to reduce more dependence upon the onshore staff. That's what we are going to impact. By and large, the norms are going to have some kind of impact, but we also need to consider the US markets have and the economy as a whole witnessed one of the best strong growth quarter. So if the US growth prospects are going up, and if the so-called the revival of the US economy and also the extraordinary growth that comes in US economy, that tend to create demand for the IT services going ahead. That's where the positive trigger can trigger for IT companies on a medium to longer term. So if that kind of a situation comes, it will be the pressure on the US administration to reduce these and reduce the norms and liberalize the visas going ahead. Depends upon that demand situation that's going to get created in US. So IT on a broader perspective, we are quite neutral, but for a longer term perspective, any significant dip on ITs, it can be a warranted buy, because IT stocks have witnessed and they went through different kind of phases. It can be back in 2008, the global financial crisis, and also the recent COVID lockdown situation. They went through different kind of phases back in 2000, the dot-com bubbles and all. These Indian IT companies have shown their resilience and resurgence. So based on the historic data, and any kind of a consolidation in IT companies, it can be a warranted buy for the long-term investors. But medium to short-term, these kind of headwinds and knee-jerk reactions can create some kind of volatility on IT companies. This is for a medium to short-term perspective.
Okay, okay, got it. Just when it was touted as a contra bet, this news definitely comes as a key headwind. But yes, shifting focus from there to auto stocks, Kranti, because we have seen that valuations for several of these auto companies are now at multi-year highs. So, how do you think investors should approach this sector after such strong returns that the sector has seen?
I tend to take some profit from the table with respect to the auto companies are concerned on a medium to short-term perspective. One thing, Lovisha, okay, autos have a dream run in the recent past. They got a surprise booster in terms of the GST, and the way the auto sales numbers have went up. It is commendable for the auto companies and auto ancillaries are concerned. They're fairly valued. I don't call it is their valuations are stretched, but they are fairly valued. But given the kind of the volatility what we are witnessing in the market, uh, there is nothing wrong taking some profit from the table, and buying these stocks at dips also can be warranted for auto ancillaries are concerned. Whereas coming back to the OEMs, auto OEMs are concerned, any dip one can add OEMs for a medium to longer term perspective. One thing, Lovisha, still, despite of the support they received from the government in the form of GST, we can see any kind of further reduction of the interest rate cycle, we can expect the auto sales numbers to be decent in the coming quarters, and the numbers are expected to be going up on a higher side in the coming quarters also. But medium to short term, one can take some profit from the table, but any dip in these OEMs, it can be a warranted buy for the investors who are looking for investing in India's growth story, as the disposable incomes are going up, and also the next pay commission, then that can create some kind of a further demand for auto OEMs in the coming quarters.
Okay, okay, all right. That's the view for auto and auto OEMs that you have. But yes, Kranti, we've seen that railway stocks have been back in focus. We have seen several of the counters, be it your IRCTC, RVNL, they've seen a bit of attraction from the past three trading sessions. But do you believe is this a start of a sustained turnaround, or is it just another pre-budget bounce that fades once the headlines do?
Lovisha, what we are witnessing is when the stocks get into momentum, and whenever this momentum is going to get continued for a couple of months, we are witnessing some kind of a froth in these companies. Okay, for example, as the railways, as you rightly mentioned, past 24 months, 18 months, these stocks were in a momentum zone, and we witnessed how the way these stocks have rallied. And these many of these stocks have been the multi-baggers in the past 24 to 18 months earlier. So after having that kind of a dream run in the past 12 months, these stocks have witnessed some kind of a consolidation, and from the all-time high, these stocks have corrected significantly. Before the budget, of course, the traction is intact, but where the problem is the valuations for these companies. The earnings and the order book is intact, but the valuations have run ahead for many of these companies. So after the price wise correction and also the time wise correction, we can see some kind of a bottom fishing, some kind of a fresh renewed interest is coming back in the railway companies. For a medium to longer term perspective, one can hold on for these companies because there is a greater emphasis towards the railway infrastructure is concerned. We're still at a moderate stage. There is a further headroom for railway infrastructure is concerned, and government allocation towards the capex of railway infrastructure is concerned. That's bound to go up in the coming years also. So we can see some kind of a renewed buying interest is coming back before the budget at this point of time. So for a medium to longer term perspective, one can hold on, but for a shorter term, one need to be strictly cautious.
All right, some technical glitch. We'll just get back to Kranti in just a bit. But before that, let's take a quick check of the markets as of now. If you look at Sensex, it's up by about 100 points. Nifty is also up by about 43 points, still sustaining above that 26,200 mark, so to say. If you look at from a sectoral front and from a broader markets perspective, the broader markets enthusiasm still continues today. If you look at the Nifty Midcap Index, it's up by about 0.2%. Nifty Small Caps also seeing particular traction with about 0.4% gain, extending gains to about the fourth consecutive day itself. But yes, India Wix, that remains on a cooling off levels, showcasing that the traders are not pricing in an immediate panic for the near term, so to say. But of course, it's the year-end holidays, so we are watching out, whether the Nifty picks up pace and reclaims those record high levels, given that, investors are expecting certain festive cheer as of now. But yes, coming back to Kranti, who's joined us once again. Kranti, I mean, this year IPO fundraising has been at record highs. How does the IPO pipeline looks like for the 2026? Because we are seeing over 150 companies at various stages of regulatory approval. Do you think that the market can absorb this kind of supply going ahead?
Loisha, there is a complete euphoria and exuberance in the IPO space, and the way the companies have raised money we witnessed, and they had a decent listing by and large. So investors are looking for the listing gains on a shorter term perspective, and there are a number of companies are feeling this is the better time to raise the money, or in terms of the selling their equity. People, the promoters and the bankers are feeling this is the right time. So what we are witnessing is strong amount of liquidity is there in the market, thanks to the way the smartphone investing has helped the people to invest in the IPOs. That has been absorbing. The retail is absorbing the supply of the paper. So, but how many companies are create wealth from these levels? That is the greater question for the investors. One need to be very stock specific and company specific while investing in the IPOs. But by and large, there is enough liquidity, greater liquidity, which can absorb the kind of paper supply that's coming in the primary market going ahead. But investors need to be little bit cautious about the valuations of the companies. One need to understand the business models of the new companies that are coming in the IPO segment. But market have the capacity; it can swallow the IPOs that are coming.
Okay, all right. Good word, digest the IPO pipeline then. Right, Kranti, let's talk about the rupee as well, because it's holding back from the past two sessions itself. And now with the RBI's, 3 lakh crore rupees of liquidity injection, what does it mean for the currency? Because we have seen that it has remained a little bit, distance away from its peaks of about 91 per dollar.
Lovisha, historically speaking, for India, we have been discussing about the weakening rupee when the rupee went depreciated to the all-time low of 91 and all. But historically speaking, as an emerging nation, India have a weaker rupee. The emerging markets currencies tend to be on a weaker note at many of the points. But in the past 10 years, if you see, the rupee has depreciated around 40%. So by and large, as an emerging nation, and the country which want to support for the exports is concerned, we tend to have a weaker currency. That's what the tendency on a longer term perspective. It is the same case with China, it's the same case with Korea and many of the emerging markets. But coming in the Indian context, thanks to the consolidating global crude oil prices, that has created some kind of a cushion for the Indian markets. Otherwise, it would have been a double whammy on the markets, double whammy on the economy. So, as long as crude at a consolidation phase, the impact on the economy with respect to the currency depreciation is concerned, on a medium to shorter term perspective, it's going to be a minimal impact thanks to RBI for the continued intervention. But the main reason for the depreciation, we all know the unprecedented way the foreign portfolio investors have withdrawn from Indian markets. That has created some more pressure on Indian rupee. When there is a reversal of the foreign portfolio inflows that comes back through India, we can see the rupee is getting stabilized at this point of time. And the foreign portfolio investors, they have been on a selling spear that has created extra pressure on the rupee. But on a historical perspective, Indian rupee has been depreciating for the contest is concerned. We have strong foreign exchange reserves to back up, and as long as the crude is in a downtrend, it's not going to create any kind of a worrying factor on a medium to short term basis.
Okay, okay, got it. No immediate worry then from a near-term basis. All right, Kranti, on that thought, we have to let you go, but thank you so much for your time and we hope that we connect with you soon.
Thank you, Lovisha, and wishing a festive season for you.
Thank you so much. Thank you. All right, let's take a quick check of the markets because if you look at the headline index, both of the Sensex and Nifty have been holding on the gains. Sensex is up by about 100 points. Nifty is also above that 26,200 mark. But yes, three key takeaways so far for the markets. First is that the broader market participation continues today. Mid-cap and small-cap index showcasing good gains and has been outperforming the headline index so far for the day itself. Secondly, we're seeing certain pressure which is coming in from the IT stocks front on the new visa rules which has been announced by the US Department, where they have prioritized more on the weighted selection process over the lottery system for H-1B visa. So yes, IT stocks, all of the Nifty IT constituents have been trading with about cuts. Infosys, Wipro, HCL Tech, all of them seeing a decline of about nearly 1% itself. And the third, Bank Nifties have been holding on to the gains. If you look at the private lenders, they have been doing quite well on the back of the rupees, on the back of the RBI's 3 lakh crore rupees worth of liquidity injection itself, and the rupee has been holding on to the gains itself, and of course rupee has also stabilized from the past two trading session itself. So yes, all in all, we are seeing a good setup for the markets because the market breadth has improved and the advanced decline ratio is still standing at about 2:1. But whether or not the second half of the trading session is able to see the Nifty continue its rebound is something that we'll be watching out for. But for now, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3 o'clock for closing, and we'll understand how the market is developed with our experts and also discuss the stocks that have grabbed the headline. Until then, signing off, do stay tuned to moneycontrol.com.